Hi, this is your boy. Hi, how are you? Everything's good. So today we will talk on IFRS 16 leases. So today's topic is IFRS 16, which is leases or leasing. So previously it was known as IAS 17. Previously it was the name of the IFRS 16 leases was IAS 17, the old structure. In the old structure there were two things. There were finance lease, and they had uh, operating lease previously. So this was considered as short-term lease, and this was considered as long-term lease in previous years, like before 2008, I think, or maybe 2012, long term. So previously this was a structure. So the thing is, it was considered as you have taken the asset as a loan. So it was considered the asset as loan. Asset, it means it was considered that it's a loan. So because there was no right to use, there was no you can control it, the asset was with you, but as per the books of accounts there was no control, there was no accountability, there was not they were not showing this in the asset side of the balance sheet, statement of financial position. So it was more likely a loan. So it was more likely the asset was being purchased on or are on lease for a major life of the asset or as a whole life of the asset. It was more of more for in previously the lease responsibilities, the repair responsibilities, anything happened to the product or to the machine or to the car which was on lease, who was responsible? The lessee was responsible. The repair and maintenance was lessee responsibility previously. And as per as this operating lease is concerned, and we considered it as we have taken the asset on rent, considered as we have taken asset on rent. It means we consider this like that we are paying a rent on it, we are just paying a rent. So instead of debiting asset, we debit cash, we debit expense account which is rent to cash. We in the books of accounts we book this entry. Double entry was rent expense debit and credit cash, that we are paying cash against rent. And the lessor, in this lessor was responsible for repairment. Okay, I'll show you the double entries now. Previously, so in finance lease what we used to do is an operating, In finance lease, with the double entry we used to place is machine or asset debit, and we credit financial obligation, finance lease obligation. We just place a finance lease obligation, and we considered it as loan that and once we pay the loan, how we will say financial lease obligation debit on repayment of and to cash. So this is these are the double entry where it was used to be before 2012 or 2008. And if it is more than 12 months, which it is, if it is more than 12 months, I told you already that we need to pay interest on it, because it's a like nobody will give you the loan without the interest. Like if he's like, apart from the friends, if you don't have any friends and if you're in the business, nobody will give you the discount. They will be like, okay, if you want this product, you have to like if I want a loan from you, you will say, okay, now I'm giving you 100, but after 1 year I will take 1100. I will take 100 and plus 10 on interest. It means 110. So if I have taken the loan from you for 100, then after interest I will give you back 110 pounds. So if it is more than 12 months, then we need to, how we will calculate financial obligation debit, because when the liability decreases, is it debited. We debit the liability when it decreases. So when we paying the loan, when we pay as a loan, we paid the loan, then the liability will go down, so it will decrease. So when it is decreasing, we do debit. So this is the debit entry, and we pay cash, credit cash, because we cash is decreasing. So cash is asset. If cash is increasing, if asset is increasing, we debit it, but when asset is decreasing, we credit. So suppose if you paid 110, so 100 was the original loan, and the extra 10 which you gave is for the interest. So this was the entry we used to prepare before, and in this case we paid as rent only, like rent to cash. It means we are paying rent against this machine. So you can see there is no asset was recorded, previously there was no asset was being recorded, and same as no obligation was recorded before. No obligation or no liability was on the balance sheet side or statement of financial position. So in previous days there was no asset was being recorded and no obligation was being recorded, and we treat this as rent. And then Standard Board, they introduced a new standard with the name of IFRS 16 leases. Leases, it says consider everything as finance lease. Standard Board says from now onward, consider every lease as a finance lease. Consider every lease as a finance lease, except one, low value lease, low value assets. But the Standard Board has not been cleared on the amount. It could be 5,000, it could be 10,000, it could be 1,000. So Standard Board did not give you or did not mention the correct amount, what is the lowest value of the asset. So like you can consider this as if a company has telephones or mobile for the staff members. So these are the assets with the low value. So you can consider these are the assets with a low value on it. So you can consider this as the operating lease instead of finance lease. And the second one is we can consider this as operating lease for leases with less than 12 month lease term or short term leases. The lease which is less than 12 months, we can consider these leases as operating leases. So we will consider these as operating leases. We will consider these as operating leases if they have a value less in value and they have a less than 12 months of time period. If the leases are considered to, like we paid off the lease in less than 12 months. Okay, so what initial amount to be included in the right of use? Because I have told you that after introduction of IFRS 16, Standard Board gave you the right of use, so you can actually record this as an asset in your SOFP. So what are the initial measurements or initial costs which is included in asset? Initial measures or cost to be included in asset. So these are the few examples I show you. We need to add all these in the cost of asset. Amount of initial lease liability. So this we will have to include first. The actual amount of the lease, the actual cost of the lease. So cost minus any incentive, lease incentives. So any cost which will bring the asset into use or transportation, everything, every cost, direct cost minus any incentive, any discount, we need to minus. We need to take a difference. Any initial direct cost, we need to add this in the asset value, or we need to add this in cost of the asset, or any dismantling cost. Any dismantling cost or restoration cost. We have already studied that if there was an asset you are building up, or you'd have taken a big machinery for the oil rig machine, like you wanted to extract the oil from sea, so you have to dig the sea, and then after, when you are done with the project for 20 years, then you have to restore that land. So when you are restoring that land, then you have to calculate the present value of the future cash flows. So because the time period, the cash flows is more than 12 months, then we need to calculate the present value, and we need to add dismantling cost if any, or restoration cost if any, in the cost of the original asset. Okay, the initial entry. Now I am initial double entry. When we have taken the finance lease, we will have right of use. Right of use debit. This is your asset. Is your asset. And debit. This is debit. And the credit goes to lease obligation. We need to obligation or lease liabilities. So this is increasing and this is also increasing. So we have taken the asset on lease. It means we got the asset. So asset is increasing, that's why we debit the asset. Because it's on lease, we have to pay interest on it. So because our obligation, our liability has been increased, so when liability increases, credit, so we need to credit this as a liability. So this is the main theme. And I told you already, if any cash flows is more than 12 months, we need to calculate the present value for any cash flows over 12 months. So let's do an example, then you will get to know how these things goes. We will practice few questions. Inception date. Suppose the inception date of the lease. Suppose the inception date of the lease is 1st Jan X6. Lease term is 3 years. Suppose we have 3-year lease. Interest is, suppose interest rate is 10%. Suppose we have 10% interest rate on this lease. And the rental, because we need to pay rent, so rental, suppose we have 10,000 per annum in arrears. I will tell you this later. Present value, because it's more than 3 years, so we need to calculate the present value. Present value of the lease is 24,870, and the requirement is we need to calculate what? We need to calculate extract of financial statements. Okay, year end to December 2000 X6. This is the requirement. Okay, so you can see the lease liability is more than 3 years, that's why we need to calculate the present value. Okay, and this is arrears. There are two cases we will study in IFRS 16. One is arrears. It means if I have taken a loan from you, I will say I will give you the rent and I will give you the interest at end of the year. Not today, I will give you the rent after 1 year, last day of this year. And this is arrears, if you are paying rent on arrears. And the second one is if I say okay, in advance. I'll show you. We will practice later. Let's focus on this first. I will draw a line. This is 1st Jan X6. This is 31st December X6, and this is 31st December X7 2007. So this is your date of inception. This is your first day of your lease. For this, because we need to calculate amortization, because I told you already in IFRS 9 financial instrument that the financial asset or financial liabilities, this is our financial liability anyway, all the financial assets or financial liabilities are recorded on amortized cost. For this we need to calculate lease amortization schedule. We will make this, and how we will make it? Has 5 column: date, then rent, how much we are paying rent, then finance cost, then decrease in obligation, and balance. So first is at the inception date, 1st Jan X6. On this date you have a balance of this 24,870 is your present value of your lease. First day of the year when you have taken the lease, 24,870. Next, when you gonna make a payment? 31st December in arrears. See here, in arrears. How much we paid? 10,000. We paid how much we are paying? 10,000. We paid 10,000 now. So you know, whenever you make a payment of the lease, it has two components. One is the actual amount, principal amount, and the second one is interest. So we need to calculate how much in this 10,000, how much you paid interest and how much you paid the actual amount. So the interest rate is, you can see the interest rate here, 10%. So 10% is the interest rate. So we need to pay the which amount we pay interest on outstanding amount. This is your outstanding amount. So we need to pay interest on 24,870 into 10%. We need to pay interest on this amount. It means how much we need to pay? This amount. It means 10,000 out of 10,000, 2,487 was interest. And how much was total amount? Like out of this 10,000, we paid interest of this amount. It means the actual amount you paid is 7,513. This was your actual amount. Okay, so previously how much it was before this, and now how much you paid already? This. If you take a difference of this, so you were having 24,870 before, now you paid 7,513. So what is outstanding now is 17,357 is your outstanding. Now next day came in, next year, next payment will be on 31st December X7. Again, how much we paid? 10,000 we paid. In this 10,000, what is its finance cost? How much interest was included in this 10,000? So now your amount is this. So you have to take interest on this amount. So this is your outstanding amount for this year into 10%. How much is it? It is 1735. 1736. Let's do it 6. Okay. If you take a difference in these two, it means out of 10,000 you paid 1,700 You paid 1736 as an interest. How much actual obligation you paid? How much actual principal amount you paid? This is a principal amount you paid. So if you take a difference of these two, it means the previously you have 17357, now you paid 8264 in this year. So it means how much you gonna get? 9093. And then the last year came in, so 31st December x8 10,000. So I showed you already, this is for 3-year lease. So 1 2 and this is year 3, last year. So you paid 10,000. How much it was in? It was 909. If you take a 10% of this, if you take 10% on this amount, outstanding amount, so you're gonna get this. The like last year closing balance will be the opening balance for this year. You can remember this way. So the total interest you paid is this. So if you take a difference between these two, if you take a 10,000 minus 909, how much you paid in total? So you paid 9091 actual amount. You can see there are few like small difference for rounding off, so the balance is 0 here. So this is the main aspect how we calculate this. So the thing is, with being an accountant, we need to see which amount goes where, which amount we need to take into the profit and loss, and which amount we need to take into the balance sheet. Let's do this. So it says for December 2006. So statement of profit and loss. For statement of profit and loss, we will take two things. One is depreciation. So we see how much depreciation. The present value is this 24,870 divided by 3 years. It has a 3-year life. So the depreciation here will go so we need to take a in depreciation this amount. This is a 3-year life. So per year depreciation is this. This will go to statement of profit and loss. Second is interest. Because we need to pay interest, we paid interest on it. So how much we paid interest? So let's see, interest is for 2000x December x. So this is the interest in December. So 2487 interest in December x6. These are the amount which will go to the statement of profit and loss, and which one will go to statement of financial position. This is your asset. So asset was 24,870 minus this, the depreciation less the depreciation. The NBV for this in 2000x6 is this will go to the this amount will go to the asset side. And in liabilities, we need to calculate non-current liabilities and current liabilities. Non-current liability and current liability. So you can see in this question 2000x6, this is your draw line 2000x6. So the amount which is finishing within 1 year, anything which is finishing in 1 year is a current liabilities, and anything which is over 12 months will be non-current liability. So you can see for 2000x6, for this year you have to calculate 1 year extra to calculate this year. So out of this liabilities is we reduce this liability in the next coming year. So for 2006 the balance was 17,000. Out of this 8,264 is we paid in the next year. It means the decreased the within 12 months we paid this amount already. So it means this will be, let me write in red, current liabilities is this, because this is finishing in 12 months, within 12 months, in next 12 months, because out of this amount we paid this amount. It means this has been reduced in this year, so we paid this liability. So this is your current liability, and this liability, out of this liability, I'll show you, let me point out with this, out of this liabilities goes for the next year. So out, this is the liability which is falling in the next year, which is after the more than 12 months. So non-current liability will be this. So this is the way we calculate all the question. Let's do one more question and then you will get to know more. Okay, next question. First is date of inception. What is the date of inception? Let's see. Let's say question says 1st Jan X6. This is your date of inception. Interest rate. Interest suppose is 8%. Lease term, and we have a lease term of 3 years, so we have a 3-year life as a lease term. Rental is 5,000 per annum in arrears. And the last we required is present value of lease. So present value suppose is 12,885. This is your data now. So we need to calculate lease amortization schedule. So we need date, we need rental, so how much we paid as a rent, finance cost or interest. Here the interest is 8%. Decrease in liability, how much we paid actually, a principal amount, and the balance. First is also in arrears, so we will pay the rent at end of the year. So 1st Jan X6, the balance was 12,885. So this is your present value, we will put it here. Okay, next payment we will make the next payment in December X6. How much we are making? 5,000. We paid 5,000 in December. Then we paid the second amount in December X7, 5,000, and the last amount is 31st December X8 is 5,000. So these three installment we paid. Okay, if you take 8% on this amount, because the balance from the last year, the balance was this, so outstanding balance, we paid interest on outstanding amount. So outstanding amount is 12,885 into 8%. So how much we paid? Out of this 5,000, we paid 1030 as interest. So if you take a balance difference between these two, will give you this. It means out of 5,000, the interest value was this. It means the rest was your principal amount. This was your principal amount, and previously the balance was 12,885. Now you paid 3,970 already. Principal amount you paid already. So how much your balance is now? 8,915 for this year. And the requirement is financial extract for financial statements December X6. We need to calculate financial extract for December X6. This is your requirement. So for this we need to calculate 1 year extra to calculate this. So in 2000X7 we paid 5,000. Out of 5,000, what was the interest? 8,915. This is your previous amount. Take 8% of this. We paid interest on this. So it means we are paying 713 as interest. And if you take a balance of these two, will come this. It means out of 5,000 we are making interest as this. So out of 5,000 we paid 713 as an interest. The actual obligation, the principal amount we paid is 4287. We paid original amount. So if you take a difference between these two, previously it was this amount, now you paid 4287. So how much left pending this year? 4628. So which amount will go where? First thing, finance cost. We need to calculate financial statement for December X6. This is your finance cost for December X6. I will prepare profit and loss account. Profit and loss. Statement of profit and loss. Interest or interest expense or finance cost is 1030. This is you paid. Next is depreciation. We paid depreciation on it. So the actual value is 12,885. It has a 3-year life. How much depreciation? 4295. This is your profit and loss. Now we will calculate right of use. I'll calculate here. Statement of financial position. Assets. Right of use. Right of use is NBV. We need to calculate the NBV. So NBV is present value minus depreciation. The present value was 12,885. This amount minus depreciation. This amount 4295. It means the NBV is, let me calculate, 8590 is your NBV, which is right of use asset side. Now non-current liabilities we need to calculate and current liabilities we need to calculate. So you can see for December X6, this is December X6, this is December X6, this is December X6. For December X6, which out of this is a closing balance, right? This was your closing balance. Let's choose this color, the darker one. This is your closing balance for 2000 X6. Okay, out of this balance, this liabilities is within 12 months we paid. So this is reduced, this is being eliminated within 12 months. So whoever less paid off within 12 months will be the current liability. So we need to put as a current liability here. We will put 4287 as a current liability. And out of this is a value which is going more than 12 months. So this is the value which is more than 12 months. So this is a value which is more than 12 months, more than 12 months. So it says it is falling in 2000 X8. So it is here. So non-current liabilities is 4628. So these for 2000 December 2006. So we have extracted these financial statements. So profit and loss, interest will go, and depreciation. And in the profit statement of financial position, right of use, the NBV, net book value of the asset, current liabilities and non-current liabilities. So this is the full question. Let's go to the next aspect for this. So I told you this is arrears. Now we will do one question with the advance, payment in advance. It means it is like I have taken a loan from a bank, 100,000. So the moment I step out of the bank, I said, oh, let's give one installment in first installment now. So I went back to the bank. I said, I took a loan from you, 100,000. So take this 10,000. Take first installment now. It means the installment, the first payment you are making on the same day. So you don't need to calculate interest on it. We don't need to pay. So we don't have to pay interest on this day, because on this amount which we paid on the same day. The rest of the amount we need to calculate the present value and interest. So let's do an example. Inception date. Suppose inception date is same, 1st Jan X6. Lease term, and we have a lease term of 3 years. Interest is 10%, and rental is, we are paying rental 10,000 per annum in advance. We are paying in advance. And annuity factor is 1.736, and the requirement is extracts for financial statements year ended 31st December X6. We need to calculate X6, December X6. So two things in this question. First is advance, payment is advance. It means on the same day we have taken the loan, we paid the first installment. And the second is annuity factor. So those students who have already studied F9, they are aware of this, and those who has not passed it yet, you will get to know this. So if you have same cash flow for the next like couple of years, so then you don't need to calculate individual year present value. You can multiply the cash flow amount with the annuity factor, but this annuity factor goes for if you have one same cash flow for the 5 years, say 10 years. So you can calculate, you don't need to calculate individual year present value. You can multiply this cash flow with this value. First thing, we need to calculate present value of lease. So the lease, we need to pay 3 installment of 10,000. It means 10,000 plus 10,000 plus 10,000. It means 30,000 we need to pay. Sorry, make it 20,000. So 20, 20, 20. It means we need to pay 60,000. Like this is without the present value. We need to calculate the present value on this. So it means first installment we are paid on the same day. It means 20,000 we paid on this first day, 20,000 on the first day in advance. The rest is for 2 more years we need to pay 20,000, and the annuity factor for 2 years is, and for 2 year annuity factor is 1.736. This is your annuity factor. It means if you calculate this, it will give you 54,720 present value. So you don't need to pay interest on this, no interest, because we paid this amount on the same day. So we don't need to pay interest on this 20,000, and the next to 20,000, because the cash flow is same, just multiply with the annuity factor. So this is your present value. So but the rest is same. So we will calculate lease amortization schedule, same date. Then we need rental, we pay rent. Finance cost, we pay finance cost or interest. In this question it is 10%. Here it is written 10%. Then decrease in obligation or principal amount, how much you paid, and the tax is balance. 1st January x6, first day, the balance was, how much your balance was? The balance was, because 20,000 you paid on the same day, you don't need to calculate interest, so just calculate this factor, this one, which is, if you minus 54,720 minus 20,000, because there is no interest for this, so the present value, the balance was 34,720. Because out of this present value you don't have to calculate interest, so minus 20,000, which is the first payment you gave. So actual lease value was 34,720. The next payment will not be on 31st December. The next payment will be on 1st Jan x7. The next payment we will make is 1st January, because it is in advance, it is not in arrears. So there is no payment on 31st December. There is a payment in the next year. How much? 20,000. We pay 20,000. Out of this 20,000, how much the interest? 10% interest. So out of this we paid 3,472 as an interest. So how much actual amount we paid? So 20,000 minus 34,720. This is the actual amount we paid. So 16,528. This is your actual obligation you paid. This is the actual principal amount you paid. and if you take a difference of these two, 34,720 previous balance, and you paid this amount in this year, so it means how much left? 18,192. This is left pending. So we need to calculate financial X for December X6. So for December X6, the total cost was, this is your interest, 3,472 is your interest. Profit and loss, this will go to profit and loss. This will go to statement of profit and loss. And I have already told you the liability which is reduced or being eliminated or being paid within 12 months is current liability. So in this year, this is the liability which is paid within 1 year. So this liability is current liability because this is the liability we paid in this year only. And this liability is still outstanding for the next year. This will be non-current liability. So let's make a statement of financial position. We need to calculate depreciation because we calculate depreciation, and finance cost goes to the thingy. Okay, depreciation, how we will calculate depreciation? Present value was 54,720. This was your present value divided by 3 years. So this is your 3 years. Where is it? 3 years life. So depreciation is 18,240 is your depreciation. And finance cost, how much finance cost? This is your finance cost, 3472. So this is amount will go to statement of profit and loss. This amount will go to profit and loss, depreciation and finance cost. Now we calculate SOFP, asset right of use. So the amount was 54,720. This was the amount, and minus depreciation. This is the depreciation. So how much we need to take into the asset? 36,480 is your NPV for 2000 December X6. We need to calculate non-current liability, which is this. I told you already. Non-current liability is 18,192, and current liabilities is this, 16,528. So 16,528 is your current liability plus because this interest is for this year, but we will pay in the next year first. We are not paying in this year, so we need to take this as accrued interest as a liability. So we need to take this as a accrued interest. We need to take this as accrued interest because we will pay this amount in the next year, not now. So I'll show you one small concept. If lease term and life is different. If you have different lease term and different life term, on which life you will divide on which life you will keep this as denominator for calculating depreciation. First thing is, if it was believed or it is expected that asset will the possession or the ownership will be transferred to the lessee at end of the lease term, then we will take full life. So the thing is, if the asset is expected to be transferred to lessee at end of the lease term, then take the full life of the asset. We will for depreciation, we take PV, present value, divided by full life of asset, in this case. If it is not expected that lesser will not be transferred, if not expected to be transferred, if the at end of the lease term, if the life of the if it is not being transferred um, to the lessee, then we will take lower of lease term or life of asset. For example, if say the lease term is, 5 years and the life of the asset is suppose 15 years, and it is not expected that the ownership will be transferred to the lessee, it is not expected, then the lower of these two, we will divide how we will calculate depreciation, present value divided by lower of this. So we will take lease term, which is present value divided by 5 years. We will not divide this with 15. Okay, this is for the day. So next I will record for the last concept in this IFRS 16, which is sale and lease back. I will record in near future. So please do subscribe my channel and keep your friends updated, and let your friends know to subscribe too. Keep watching it. Take care. Bye.